This video could change your life, but only if you watch it until the end. Today, I'm going to talk about a company that analysts predict will see a 600% rise in its stock price over the next 12 months. If you don't want to make the worst decision of your life, please watch this video until the very last second and subscribe to the channel for my next video. We'll pay special attention to the company's financial situation and analysts' future forecasts. So, let's get started. ENDRA Life Sciences is a company specializing in medical imaging technologies. They've developed a revolutionary ultrasound platform called TAEUS. This platform adds radiofrequency signals to any ultrasound device, enabling it to create a thermoacoustic map of tissue structure. This method can assess not just surgical procedures but also the amount of fat buildup in the liver. This is especially important for conditions like non-alcoholic fatty liver disease, known as NAFLD or NASH, caused by alcohol consumption. The best part is that this assessment can be done easily with a blood test, meaning there's no need for invasive methods to check the liver's condition anymore. The technology developed by ENDRA Life Sciences can replace expensive MRI scans and is 40 to 50 times cheaper than MRI. The company was founded in 2009 and is currently headquartered in Ann Arbor, Michigan. It went public on the Nasdaq Stock Exchange in 2014 under the ticker NDRA. Doctors and researchers agree there's a huge need for new tools to diagnose fatty liver conditions. This field affects over 2 billion people worldwide and includes diseases that can be treated if detected in time. ENDRA's main vision is to turn the TAEUS device into a simple, accessible tool like a pressure gauge for the liver. The company aims to make liver diagnostics a daily, widespread process with this technology. On top of that, ENDRA plans to expand the capabilities of the TAEUS technology. In the future, this device could be used in various medical fields, such as measuring tissue temperature and monitoring blood circulation in vessels. When it comes to the company's financial situation, should note that ENDRA hasn't yet established a revenue stream and is operating at a consistent loss. For 2023, the net loss was approximately $10.06 million, down from $13.18 million in 2022. The company openly admits it generated no revenue in the current or previous year. By the end of 2023, ENDRA's total accumulated deficit reached $91.93 million, largely due to significant research and development costs. The company currently funds its operations mainly through the sale of shares and other financial instruments and will likely need to raise additional capital in the future. Financial reports from the start of this year show that ENDRA has optimized its expenses, significantly reducing its cash burn. In the first quarter of 2025, the net loss was $1.0 million, a big drop from the $2.8 million loss in the same quarter last year. At the end of Q1 2025, the company's cash reserves stood at $2.1 million. To optimize costs and lower the net loss, ENDRA reduced its workforce and cut operating expenses over the past 6 months. As a result, it shifted to a cash preservation strategy starting in the second half of 2024. So, as of March 31, 2025, ENDRA had $2.1 million in cash, and by selling additional shares in April and May, it raised that amount to $2.5 million. However, this amount still isn't enough to fully cover the company's plans for next year, so it will need to raise more funds to cover essential expenses. Financial reports note that raising additional capital will remain necessary until a revenue stream is established. Overall, ENDRA's current financial situation, marked by a large accumulated deficit and no revenue yet, indicates startup-level risk. Still, the recent management of operating costs has reduced losses and increased cash reserves, which is a key step toward financial stabilization. That said, it remains a significant risk factor. One thing I really like about this company is its focus on strategic partnerships. ENDRA actively collaborates with both academic and industry partners to bring its technology to market. For example, in the fall of 2024, the first clinical trial using the TAEUS device began at LMU University Hospital in Munich, marking the first real-world research based on the device's approval for the European market. ENDRA's CEO, Alexander Tachmann, said this partnership is a strategic step toward entering Germany's largest healthcare market, and the data collected will support the FDA's planned de novo application in mid-2025. Another example in Europe is a joint research project that started in 2021 with Inselspital University Hospital in Bern, Switzerland. There, Professor Annalisa Berzagatti is evaluating the TAEUS device for NASH NAFLD patients. This project strengthens ENDRA's clinical evidence base in Europe. Similarly, UPMC and the Medical College of Wisconsin in the US have participated in open clinical trials using ENDRA's experimental devices. Industry partners also play a big role. ENDRA has a long-term collaboration with GE Healthcare, a market leader in ultrasound equipment, which provides technical support to ENDRA and secures initial production and licensing benefits. GE's leadership believes TAEUS technology will open new possibilities in ultrasound. The company has also secured partnerships in the pharmaceutical industry. For instance, in 2021, ENDRA signed a joint research agreement with Hepion Pharmaceuticals, an active player in NASH treatment. Under this deal, ENDRA's TAEUS system will be used as an additional tool to measure liver fat in Hepion's clinical trials. Former ENDRA CEO François Michelon considered this a crucial step, calling it opening the door to wider adoption of TAEUS technology in the drug CRO sector. Another similar partnership was signed in 2021 with Australia's VGI Health Technology. VGI will use ENDRA's technology in its Phase 2 clinical trial for NAFLD and NASH. CEO François Michelon highlighted that this partnership will save time and costs while offering a chance to expand into the Australian market. Before we move to analysts' forecasts, let me remind you that I've pinned a link to our WhatsApp channel at the top of the comments. Don't forget to check it out and subscribe for more info. Now, let's dive into the analysts' predictions. Analysts are very optimistic about ENDRA's stock. For example, according to the MarketBeat analyst portal, one analyst's 12-month target price averages around $50, which is approximately 602% higher than the current price. Based on MarketBeat, this suggests a huge potential price increase for the company's stock. Similarly, TipRanks reports that the average 12-month target price for ENDRA over the past 3 months is $46, representing a 546% rise. Other analyst services like Fintel also show similar figures. Fintel has set a 1-year price target of $48 for ENDRA shares, which is hundreds of % above the current market price. All this indicates that analysts have high hopes for this innovative technology and its potential market. As a result, some analyst experts believe ENDRA shares could trade at 4x, 5x their current levels in the near future. However, there are risks for investors. Sources remind us that ENDRA is still a company without revenue, resulting in a negative P/E ratio. Since its main expenses are tied to research and development, funding these costs will be necessary until a revenue stream is established. In this situation, high potential growth forecasts come with risks. For instance, ENDRA's market capitalization is currently only around $5 to $6 million. The small capital base and low liquidity could lead to sharp short-term fluctuations in the stock. Major analysts categorize ENDRA as a buy, with target prices ranging from $40 to $50. These optimistic forecasts reflect expectations that the company's technology could achieve great success. However, investors should remember that such a high potential increase comes with highly risky scenarios. Analyst targets are static predictions. The real outcome will depend on regulatory decisions and clinical trial data. That said, if ENDRA secures FDA approval and enters the market, its shares could fetch much higher prices in the long term compared to current levels. Many market commentators and analysts are already predicting a rebirth based on this potential, but any investment decision should consider both positive and negative scenarios. To wrap up, I'd like to say that ENDRA Life Sciences is a dynamic company working to complete its research phase and transition to commercialization. Its strengths include cutting-edge TAEUS technology, a robust patent portfolio, reputable partners, and a creative executive team. Though the company isn't generating revenue yet, analysts believe the market has a huge need for this technology and forecast a potential 5-6x price increase for the stock. On the other hand, ENDRA currently stands out for its low liquidity and challenging financial situation. The company's main goal right now is to secure FDA approval and bring the TAEUS device to market. The success of this stage will determine future outcomes. There are bold predictions that the stock could rise 600% in the future, but this depends on market changes and regulatory decisions. My main advice for investors is to move forward with enthusiasm but also caution, valuing the company's technical potential while keeping risks in mind. Honestly, among the companies I've analyzed recently, I've come across only 2 where almost all analysts are unanimously positive. One is ENDRA, which we're discussing now, and the other is a company I shared my thoughts about in a video 2 posts ago. Check the link to that video at the end of the screen. Even though companies like this carry significant risks, they also offer substantial opportunities alongside those risks. Either way, it might be worth adding a small, manageable amount to your portfolio and, if the company stabilizes and improves its financial situation, considering more purchases for long-term gains. So, what are your thoughts on this company?